All right, so markets gapped up overall to new highs yesterday. And we saw some selling pressure. It was more severe in small cap, but we could see selling in the SPYs as well. Came below 258, took out this 257.70 prior resistance. Came into the 257 support area. It was bought right above it here, and then in the after hours,
Arrow gets
was tested. Excuse me. So looking at today, 257.70. Here's our potential resistance, and then 258. Support is obviously 257. On the IWM side, which was pretty wild. So we've been watching a bunch of failures at 150.50 for a while over the last month. And we gapped up right to 150.50. So we basically covered the top of the range to the bottom of the range. So that now, it's like something like 4 of the last 7 trading days have been pretty wide range days. So historically what happens when you get a lot of, let's see, where is it? You get a lot of this type action where you're just going up and down a lot in bigger ranges. This is something historically we've seen right before a larger market pullback, this type of instability, increase in volatility. 2017 has been a bit of an aberration in terms of predictive value of things we normally see that lead to down moves. But I certainly would emphasize being short IWM as long as it's below 148.5. And if it ever takes out this low, this 1 month low here, pressing that position, there's a few dollars of downside from there. And it's certainly worth taking a loss there, I think. So in the meantime, so 148.40 to 148.50 here. If you're shorting here right in the open, what you want to see is you don't really want to see it above 148.75. And then what you'd like to see is quickly back down below 148. Confirmation would be taking out yesterday's low. It was pretty good volume yesterday, but then again, this big down day here, we had pretty substantial volume as well. So, all right, so this is it. I mean, this is kind of the busiest earning, today and tomorrow, really the busiest time of earning season. You saw me short Facebook in the after hours. It's a pretty simple trade. The options, the 185 calls were priced at $3. So I knew the market, if the numbers were good, expecting a $3 up move to kind of 188 area. When it failed there, just threw up an offer at 187.5, which is kind of a blip on the chart now. So, this is my experience, to my own horn a little bit. One of the things I'm best at, or one of my highest skill levels, is momentum technology names. The after hours following earnings, and then the next day, I'm quite good at identifying kind of the key prices and the higher probability plays, in the Netflix and the Facebooks and the Apples, Amazons, etc. So I would say, always figure out what's best for you, and want to figure out your own game planning. But one time to really pay close attention is during earnings season on these types of stocks. It's kind of my bread and butter. So it failed up here, shorted the retracement into 185. And then after I left the desk in the after hours, it just trended down to 180. So the numbers were very good. So let's understand that, they beat. I kind of had numbers in my head that if they beat by a certain amount on revenue and on revenue mainly, that I would play them alongside, and it didn't really come close to that number. So that's why I looked for the failure. But here's the long term. It's obviously one of the 3-4 strongest stocks in the market, for good reason. They kind of keep on beating numbers, raising guidance. It's accelerated a little bit recently to the upside, and so in these situations you can get a reset. I don't know if you're going to get a reset all the way back down to down here, but certainly a retest, kind of where it just broke out from, would not be unreasonable over the next few days. Similar to kind of Netflix did after their earnings. So in the pre-market, I shorted a little bit here on this pop above 182. Yeah, I got 182 and 182.30 prints, it looks like, so I wasn't really watching it. So only did a few shares. The way I'm looking at it is, and I've drawn it out for you right here, is this is kind of the first area where it could fail. Takes out pre-market support. I don't know, another dollar downside, $2 downside, something like that. If they really, really crush it, 176. And then above 182, where it sold from after it made the lower high here in the after hours, this 184 would be kind of the next spot where you would look at potential resistance. Right now, seller's a little bit in control. Starts to consolidate above 182 and takes out this 182.40. Buyers start to take control. Doesn't mean it's going to go all the way back up here, but 183.80 to 184. And the other most obvious trade would be it's just making lower highs here, lower highs, consolidates below 180, and then starts to break to the downside. A ton of people will pile onto that trade. That doesn't mean it'll take out this pre-market low, but there'll probably be a pretty quick momentum trade to the downside on a key, bids dropping below 180. That can happen right after the market opens. So those are some possibilities for you. Some bids in case it goes down while we're talking. All right, the next one is FEYE. So this is another one I faded in the after hours. The numbers were good, but the billings were lower. Now, all these software companies over the last couple of years have been transitioning into cloud stuff. So sometimes it kind of screws up the guidance as they transition over. We saw that with like Adobe and Microsoft. Eventually the market figured it out and the stocks resumed their uptrends. The difference is obviously the stock's not a market leader. It's been beaten down with the other security stocks. But that type of confusion sometimes creates a buying opportunity. So I bought it in the after hours of 14. It came down close to 14 again. So everyone had a chance to buy some against 14, 13.50. Pre-market, 15.30 was kind of my target. First area that we could potentially fail. So I sold some here. Some people think it could go all the way back to 16. Not sure. But anyway, this area here, 14 to 14.30, seemed like the spot to buy it. And then 15 to 15.30, sell it. Now, if it has a very shallow pullback and spend some time consolidating above 15 and takes out that 15.30, I'll give it a shot alongside, but I'll be careful. They hit it very quickly below 15.20. I'm not going to pay here and then let it go all the way back down here. Just haven't had a lot of luck with the stock paying up in it over the years. Usually buying into weaknesses has worked well for me. But it's pretty liquid in the low price, so that's why I kind of stuck it second. And then Teva, it's back down to 12. So Teva, I didn't see what the numbers are. I just saw headlines that I missed the numbers. That they might actually raise cap. I mean, things aren't good here. Admittedly, I thought once it was down in the 20s, it was pretty close to being done. I guess they just have more debt than you think, and so there's an issue there. The sector obviously has been battered the last couple of years, specialty pharma, and they held on for a while. I thought longer than the other stocks, but now it's pretty much. It's back down to where it was 15 years ago, which is just kind of insane. All right, so far in the pre-market, it bounced up to 1240. I mean, I guess initially my thought is I'd play it back up into this area here, into the close to 1250. If it got above there, I'd probably try to ride it up to the high 12s and then short it. Any type of, after 10 o'clock, if it's consolidating in the 12 area and breaks to the downside, just get short and, try to ride it down. Just like that other low price stock the other day, which I forget, which we were short at 14, they went to 12. So I'm old and my memory's not that good. So that's Teva. And Tesla, Tesla's back below where I actually bought it in the after hours. So my thought on this one was they'd flush it below 300 possibly on the open, and I would use that as an opportunity to buy some calls for next Friday, maybe some like 325s or something, on the chance that it might completely reverse. That's how crazy this stock is. So remember, it had this massive multi-year breakout, which we were all over 6 months ago. Actually taught the trade and talked about it in Winning Trader before it happened. Was, kind of once this, well, here it is. The idea was once it took out this 18 months in consolidation, you go up 20, 30% pretty quickly. It ended up going up about 40%, maybe. But it has double topped here. But again, I still think, with this, and maybe it comes closer to testing this breakout here. But similar to Amazon, I think a pretty good probability buyers will come back in, and then it'll rip to the upside, ripping some shorts heads off again. If it does that and rips back up to this area here in the next week, could make 15, 20, at least 10 to 1 on options play. So. That's my thought there. Flush below 300. See if it bottoms right in the open. See if it makes a higher low. Happy to play it to like 308 to 310 like it did in the after hours. And look, if it doesn't have much of a bounce, and it's consolidating below, 303 or something, it's pretty tight. It's okay to trade it on the short side on a downside break. Probably be a lot of people hitting it below 300. That's that. X. So the idea on X was to short on a failure in the 29 area. First move was down when it started to, they buy it. It didn't break down on this first move on the failure at 29, so I flipped it long, caught the move up to 29.30, flipped it back to short below 29. But this is one of those circumstances where I had to hop on a call at like 10:40 or something. So I missed the big down move. But pretty much failed in the area, one of the areas we highlighted on the game plan from yesterday, which is right there. After making the new high below, shorted it. I probably should have just put in a stop above the high of the day when I left the desk and put in bids at right here, 27.50. Ended up going down to 26.70. In the afternoon, I scalped it a few times. Kept on shorting it in this 27.25, 27.30 area and covering it at 27. Actually worked a few times. It's above that now. So I think looking at it for today, 27.50 is kind of what I'm looking at. So if it gets above 27.50, it could very quickly, the stock gets a little nutty on the open, could very easily come into this area here. I would think in the 28 area, it's a short, close to 28. EVHC, another one that caught me having to leave the desk. So this literally right here is me getting stopped at. The idea was it had such a good bounce in the pre-market that it broke out from here. So I think what I said in the morning meeting was, okay, well, we'll look for a higher low. And that's why I started buying it. And I basically was buying it right here, stopped here. And then I went to my call and it bounced $5. So that's circumstance. Now, if you look at it on the 30-minute, it just, in the pre-market, it made this high, and then it made a lower high here, and then a lower high here, and then a lower high. So it was making a series of lower highs. Now you can argue it was making higher lows, but right at the end of the day, it closed kind of below this higher low here. And so the seller is in control. which brings this into play 25.5, and brings 26.70 into half. So sellers in control. I have a few shares from right at the close at 28. Nothing to worry about for myself. So I have alerts 27, 26.70 to see if kind of this is kind of where I got stopped out on the open yesterday before this $5 bounce, to see if it gets bought here. But it was extremely difficult stock. What made it difficult was it just didn't, it was being bought here. Like basically it was being bought here for about an hour. You can see this is a 30-minute chart, and then started to tick up, and then it got kiboshed. So I hit out of it here, and then it went right back up. So it was tough. I would say other than shorting it at 32 in the pre-market and buying this little breakout here, which had very nice follow through for an hour, the rest of the day was pretty tough. And mainly because it was compressing, but in a big range. Triple D. So Triple D, right on the open, put in its low, made a higher low and a higher low, and it bounced up to 980s, where it broke down from the pre-market. And they were buying it though at 935, it looks like. So I don't really have much to say on this one other than, you can fade this. Below 935, if you want to trade on the short side, I wouldn't blame you. 9's potential support, and then yesterday's low 880. And then finally ICPT. I thought this was a really good example. I don't know if people shorted it into $68, but this is a really good example. I think we had 68 on there as resistance. There's just a lot of potential selling pressure. 67.5, 68. This area here, it sold off really hard from there, coming into earnings, and if it fails in that area and kind of gets below 65.70, this consolidation, there's not much until 61. It didn't quite get down there. It got to 62, which had been supported a couple of days ago. And that's kind of why in these congested consolidation areas, if you get a failure, shorting there can lead to an outsized gain, because their bids basically, they're much further down. And not because it's necessarily a ton of sellers. It's just when something rips from here to here, this is the natural place where there's going to be bids in the stock, 62, and so you'll get the quick down move. And so risking 50 cents in the 68 area, $6 down move, $5 down move. Looking at it today, I'd watch 66, see if it makes a lower high. 66.75, I guess, is actually where the down move started from yesterday. So right above. So if it spiked up above 66 right on the open, I'd nibble on the short side and then look for confirmation below 65.70. Same thing again. 64 would be a higher low. And then finally, that's it. Yeah, I'm sorry. Yeah, I got to talk about BABA. My bad. So BABA, the emphasis has been on the long side since it's been above 150. I did buy it the other day at 170. Sold it a little bit too early, I guess. The thing about that BABA is it's getting a little bit pricey up here. You can see it already sold off in the pre-market like $6, and now just made a lower high at 192. The way I'm looking at it is lower high here, 192. I want to see what happens at 190. But you want to be careful on the long side, unless it's holding above 192, or right on the open if you get a flush below 190 and it starts to hold back above 190. So it's getting extended at this point, in terms of it's a big run, psychologically getting closer to 200. Longer term, great, but from a short-term perspective, short-term trader perspective, there could be a significant down move in it again. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.